Hi, John. Welcome to Venture with Grace for life.
Great to be here.
Amazing. Okay, so to give the audience a little bit of your background, so as you know, I previously stalked you on another podcast. So you have worked in Charles River Ventures and Highland Capital, and you started your own company. Eventually, you co-founded General Catalyst. Now you're the managing partner of GreenLight Fund. And why don't we start with also like managing director of Sigma Prime Ventures? So why don't we start with you sharing us like some of the core lessons that you've learned early on in your career, both as an investor, as a founder of a fund, as well as a founder of a company?
I mean, there's lots of lessons that I've learned and lots of lessons that I'm still learning. And I think probably that's maybe the most important lesson is to always be learning. Because if you're always learning, you can be continually improving what you're doing and get better and better and better at it and have more and more of an impact. And so, that's probably the most important lesson. Be a lifelong learner. The second thing is, try to either do things or back people who are doing things, that really seem uniquely, authentically suited for what they're doing. So in terms of, backing founders on the investment side, I always looked for people that had an unbelievable passion for the area that they were entrepreneuring and domain expertise, because that's what enabled them to see something that others didn't see. And that constellation of both commitment to an area and domain expertise, meant that if they said they were going to do something for the next 10, 20 years of your life and their life, you could believe that that's what they were going to be obsessed about and doing something. So, do something that you're authentically like unbelievably passionate about, or back people the same thing, as opposed to, a kind of a retread who said, well, I did X, Y, Z, and now I'm exploring a new area or whatever. And I think that has gone for me both in the for-profit world in terms of, teaming with folks to create venture firms who are really passionate about backing entrepreneurs and working hand in glove with entrepreneurs, or backing entrepreneurs, like the people who founded Equip or the people who founded Phenom People. These were folks that are unbelievably obsessed about their area of the world and have gone on to build phenomenal companies that have huge runway. And then the same thing on the nonprofit side, both to find things to back where I was really passionate about changing outcomes in particular areas, and where there were social entrepreneurs that were unbelievably passionate about those areas. Or now what I'm doing with GreenLight Fund, which is to create essentially an innovation superhighway to spread things that work to cities across America. It's just something I'm unbelievably passionate about, which is why I'm, kind of half-time business, half-time GreenLight these days.
Okay, so why don't we start with GreenLight Fund? So, can you share a little bit more about like, what is GreenLight Fund, as well as, for example, since like a lot of it were like nonprofit as well as like impact investing, how does the money flow in the industry? And obviously you have a great mission. And I would love to like unpack that a little bit. Yeah, so as like I feel like whenever people mentioning about like nonprofit or like social impact, people are thinking about it may not be something that's like it's going to generate any revenue, but obviously you guys have successfully done it in multiple funds. Why don't we talk about like how does the monetary side of things works and the impact investing domain?
Okay, so let's talk a little bit about GreenLight first, just so people sort of know what it is and what we're trying to do with it. And then I'll talk a little bit about how the money flows. Because just to kind of get to the punchline on that, if you're in the for-profit world, you have to generate revenue and you have to generate sustainability if you want to make a difference. And it's the same in the nonprofit world. If you want to really make a difference at scale, you need resources to do that, and you need to have a business model that's generating the resources to cover costs, whether you're in the for-profit world or the not-for-profit world. And obviously we figured out a way to do that at GreenLight, and we figured out a way to back people who've done that. So, but a little bit about just GreenLight to begin with. And people can check it out on the web, www.greenlightfund.org. We incorporated, my co-founder and partner in founding GreenLight, Margaret Hall, and I, we incorporated as a not-for-profit about 20 years ago. So we're about to celebrate our 20th anniversary. And the real impetus behind GreenLight was, how do you create change for children and families navigating poverty? And how do you do it in a place-based way in a city? And a little bit the inspiration for this was Boston, my hometown, where I had been involved in the nonprofit sector deeply and been donating and partnering with nonprofits locally and backing great institutions like United Way, the Community Foundation, the Food Bank, Pine Street and Homeless Shelter, like all these unbelievable organizations, and participating in ways in city government or the school system, and seeing that, a lot of things were moving in a positive direction. And yet when you looked at low income children and families, there was like a 90% chance statistically that their kids who were growing up in poverty would be in poverty as adults, and then a 90% chance that their kids would be in poverty as adults. And so this economic and social mobility that we really want, the American dream, it wasn't as accessible as we all want it to be. And so I started to think about, what could I do to change economic and social mobility over time in a city? And as I looked at it, I realized, there's all these great people doing great work, and some things are getting better. But yet there's all these rungs on the ladder to opportunity that are missing. There's all these metrics that are really bad outcomes for children and families navigating poverty. Just to tick off a few, this is about 20 years ago, we were creating GreenLight Boston. Certain zip codes, 10% of kids would show up ready to read in kindergarten every year in certain zip codes, when we know that in more affluent communities, it was like 90%. And there's huge predictors in terms of educational attainment, income, salary, et cetera. Or, again, this is historically 20 years ago, every year, several thousand kids in Massachusetts aging out of foster care with disastrous results, 85%, homeless, incarcerated, unemployed, early unwanted parenting, multiply above. I could keep going, meaning there's a lot of good stuff going on, and yet there were all these metrics that didn't lie, that were missing rungs on the ladder to opportunity. And I started to think about, well, has any of this changed in the last 10 years? Like, no. Does anything look like it's going to change in the next 10 years? No. And as I started to think about all these rungs that were missing on the ladder to opportunity, I realized that, wait, just because something's not existing in Boston that's going to move the needle on a metric, maybe somewhere else, somebody's built something great that would change that outcome. And they've proven a revenue model and scale around it. And let's say in San Francisco, changing outcomes for 10,000 kids a year that were entering kindergarten, making them 90% ready to read instead of 10%. And they'd expanded to multiple cities, and they'd proven that this was going to really work and consistent and at scale in multiple cities with a repeatable revenue model. But because there was no market system, was never going to get to Boston. And so I started to see the world from a place-based perspective from Boston, saying, like, we've got all these rungs missing on the ladder to opportunity. The rungs are out there. What if we created a new community utility we would call the GreenLight Fund that would work in harmony with all the existing community utilities like United Way or Community Foundation? But we wouldn't replicate anything that they were doing. We'd just do something a little different, which is we would be looking not at what was existing, but what was missing. And basically every year we would look at some missing rung in a community-driven way, and we'd find something that could move the needle on that issue, bring it to Boston, help it be successful, make it happen. And lo and behold, in 20 years, maybe we could actually put 15 rungs on the ladder to opportunity, change 15 outcomes. Make a long story short, it was even more successful than we thought, because the things that we brought were even more successful. They scaled even better. We kept learning, doing better and better. So fast forward to today, to make a very long story short, we're now operating in 13, soon to be 16 cities with a 15-city waiting list, having added 60-ish rungs to the ladder of opportunity in cities across the country, which are unlocking over $100 million a year of state, federal, and other resources to make change in the cities that the things we brought are operating. And we're en route to reaching about 1 million children and families a year over the next year or two. And eventually, if we roll the clock forward 10 years, we'll be operating in 25 to 30 cities, having done hundreds of things that collectively are infusing somewhere between $700 million and $1 billion of annual revenue flow to support the things that we brought to cities, state, federal, and other revenues that are flowing because we brought things to cities, and we'll be reaching 20% ish of all Americans living in poverty in urban areas. So that's the genesis of the idea. That's a little bit of the history of it and the sweep of it currently, and then where it's headed. Now back to your question about revenues, right? Like you can't make this happen without revenues. So in GreenLight, we've devised this mechanism. When we go to a city and we raise typically a $6 or $7 million fund, the same way I raise venture capital funds, and that enables us to do a GreenLight Miami or a GreenLight Dallas or a GreenLight Kansas City. And those are donors that are committing multi-year funds. So we know how much funds we have to spend in Miami. And let's say we raise $6.5 million in Miami. That means we can run for 6 years in Miami and put 5 rungs on the ladder to opportunity, bring 5 things to Miami to change outcomes. And then the results that we aim to achieve is that 6 years down the road, because GreenLight's been in Miami, we've done these 5 things. These 5 outcomes are changing. They're really successful. These organizations are operating at scale. And maybe we're reaching 100,000 children and families a year across these 5 dimensions with changed outcomes. But in order for us to bring something to a city like Miami in that example, it has to have been proven that it was successful in an original city and it spread to 3 or 4 cities, and it had a revenue model that more or less covered costs. And that was some kind of recurring revenue model, whether it was paid for by the public school system or paid for by the housing authority or paid for with federal funds, or paid for by, client or user pay because people saw enough value, et cetera. And so when we're bringing something to a city and we're spending $600,000 to $1 million to help bring it to the city and cover the costs of them adding Miami as their 8th city or 9th city, long term, if they're going to be a couple $1 million a year organization in Miami changing outcomes, we want them to be activating a revenue model that they've proven in other places. And we're not going to bring them to Miami if that revenue model isn't, in our view and their view, pretty secure as a roadmap. So in that scenario, we spend $600,000 to $1 million to make something happen in Miami. Maybe the next 10 years, it generates like 20 million in revenue from whatever its revenue source was that it was proven in multiple other cities. And let's say it impacts hundreds of thousands of children and families to change that outcome. But if it didn't have a revenue model and that wasn't proven and we didn't validate that that was going to happen in Miami, we wouldn't be able to bring it to Miami because we're not going to bring something that's going to last for a couple of years and then tip over and fail. So, and then after 5 years of doing that or 6 years of doing that in Miami, our plan would be like we've done in all our other cities that are long enough. The results have been so great, the yield on what we've done, that we would raise a second fund for GreenLight Fund in Miami, the same way, Sequoia raises a 15th fund, or Andreessen Horowitz raises a 7th fund, or General Catalyst raises a 12th fund, or whatever, because the results are so good. And so in Miami, we raise a second fund, and that will enable us to go the next, because the funds get bigger and bigger, it will enable us to go the next 7 years and do the next 6 things. So GreenLight, we've developed this model of how we want to make change, but integral to that was developing a revenue model that worked for GreenLight to cover GreenLight's costs, and then making sure that the things we did had revenue models so that they could be sustainable and scalable and deliver lasting impact. And so we have a very sophisticated business model at GreenLight, even though we're a nonprofit. And the organizations that we bring to cities similarly have sophisticated revenue models. The tough thing for them is which cities to choose and how to expand and how to get pulled into a community as opposed to being pushed into a community. That's kind of the problem that we solve, running this community-driven process every year in all of our cities. But I guess the key thing is, if you really want to make change, whether it's for profit or not for profit, you got to think about this pesky thing called a business model, because otherwise you're just not going to be able to make change at scale.
Totally. Okay, so I would love to unpack a little bit more about what are on your portfolio list, there's a lot of different companies like Blueprint School Network or Center for Employment Opportunity or Care Message. So compared to like a traditional for-profit fund, I guess like what would be the different criteria that you're selecting these portfolio companies?
Okay, great question. So the way the GreenLight works is, first of all, everything's locally driven.
Mhm.
So as opposed to, an investment group, thinking about like, where could I go invest to get the most return
Mhm.
in a for-profit scenario, like a venture capital fund scenario,
Mhm.
because that's kind of what's kicking off. Okay, you raised a $300 million venture fund and you want to make so many investments and you want to deliver LPs a 5x return.
Mhm.
So what kinds of investments are you looking for, and where do you think the areas of software, if you're a software investor, are that are changing rapidly, where new entrants can really build great companies, and you go hunt those companies and you invest in them, and you're looking for like raw return, right?
Mhm.
And how to create a basket of a portfolio that's going to deliver returns for LPs and for GPs, and where you're going to add value, and where you have competitive advantage as a venture fund to be helpful. So, but with GreenLight, everything starts with a need in a local community. So let's
Mhm.
say GreenLight Bay Area, which was our third city. One year, we were looking at food insecurity in the Bay Area because we run a community-driven process every year. Our executive director of GreenLight Bay Area and the Selection Advisory Council listen to the community, and we're basically asking the question: what metrics are broken and aren't changing?
Mhm.
What rungs are missing on the ladder of opportunity here? What data shows that there's a real problem and it's not moving and not changing? And so we looked at food insecurity one year in the Bay Area, and despite all the wealth and all the unbelievable things going in the Bay Area, turns out that there's a couple 100,000 families, that were food insecure in the greater Bay Area. That was a metric that could be measured and tracked. And there were these unbelievable, food related entities, food banks and school systems that were, collecting food and wanting to get it to families. And so there were unbelievable food resources, and yet still there was all this food insecurity. And so we started to take a look at it, and it turned out that a major issue was last mile delivery. Like, how would you act? Because the food, but how could you get it to families? Because families, whether the lack of availability of public transportation or childcare or whatever it was that really prevented families from accessing the food, was a huge issue. And it turns out this was like a missing puzzle piece. So Greenlight is looking, just to come back to your question, that year we're all starting with what the need or the issue was, which is there
Mhm.
were these hundreds of thousands of families that were food insecure, and it wasn't changing. And there was a huge need that the community was prioritizing. Let's finally do something about this. Like,
Mhm.
what Greenlight, can you find something somewhere else that might be a missing puzzle piece that, if we made it happen here in the Bay Area, could change things? So we go and find Food Connect, which is this incredible nonprofit founded by this unbelievable woman who grew up food insecure. And she developed this software platform, software and code, where people can type in like what food they have, whether it's a food bank or a restaurant or a distributor or family. And then families can type in what food they want. And once matches are made, they handle all the logistics to make sure that the food gets delivered to the families, either by, because once a match is made, a ticket gets created, and either Uber, Lyft, DoorDash, trucking companies, depending on the size of the load, pick it up. And for the most part, pro bono, deliver stuff. And so it's an unbelievable experience for families because it's the same thing as seeing an Uber coming
Mhm.
to you. You see the food coming to you, and the food gets delivered to your doorstep. It's just an unbelievable. And it turns out this was a massive missing puzzle piece. So we bring Food Connect. We decide after a year-long process, which I'm simplifying, that okay, Food Connect would be needed in the Bay Area and would work in the Bay Area. So could Greenlight bring it, give it somewhere between 300,000 and $1 million to help make it happen long term? It'll be, let's say, $1 million a year program in the Bay Area, supported with subscription fees, because it's sort of proven that model in other cities, and we can make change. And so we decide this is the one issue we're gonna focus on that year in the Bay Area, because we do one issue per city per year. It's the one solution or thing we're gonna bring Food Connect to the Bay Area, roll the clock forward, 2 years, 3 years. I think reaching about 60,000 families and delivering, close to millions of meals.
Mm.
Radical change that is impacting people's lives in a really dramatic way and in a measurable way that if GreenLight didn't exist and we didn't bring Food Connect to the Bay Area, it wouldn't happen. So to contrast that a little bit with the venture capital investment process, the first thing is it all starts with community need, because no matter how great something is, if the community didn't need it, or it wasn't going to be used, or it wasn't going to be making impact or change lives. So we're really starting with, a community-based need that the community is communicating to GreenLight, like, here's a problem, and it's a persistent problem. See what you could find in the toolkit that you might be able to bring and fit into the ecosystem and partner with everybody locally, make change. So it all starts there. That's the first thing. The second thing is, of course, we're looking for a not-for-profit, because in general, when we bring something, because it's serving people that can't afford to pay, you're probably going to have a revenue model that at best can cover costs, but it's generally not going to be money making. So we start with a need, then we're looking for a not-for-profit, and we're looking for a not-for-profit that's proven sustainability in multiple markets. So again, we're looking for sustainability, not like massive profit or massive value accretion. And we're looking that they've operated great in multiple cities, and then that they're known enough so that's a known puzzle piece that we bring it to our city, we can make it happen. They're going to operate successfully. And then what we're tracking is, that was a 1-year cycle and a $300,000 to $1 million make it happen commit. What we're tracking is not the profitability of it, but 5 to 10 years later, how many millions of people in the Bay Area has it impacted, and how measurably, and is it sustainable? Is this something that's going to be the gift that keeps on giving to the community and addressing this unmet need for years and years and years, and really changing lives? And so the metrics are different. How many lives you change? How deeply? Is it delivering on its KPIs? Is it sustainable? And frankly, can we learn so that if we looked at the same issue in Charlotte, or we looked at the same issue in Detroit, and we brought Food Connect to one of those places, we could do it even better. And so, yeah, that's how it differs from a typical traditional investment process. One similarity, though, from doing this for 21 years or 20 years, and having looked at multiple issues in cities every year, and having looked at multiple things in my work, we now have a national database of somewhere between 1,000 and 2,000 high-performing nonprofits that have made change in an original geography sustainably, at scale, and verifiably, really moving a metric that's important for low-income children and families' life outcomes, and have expanded to multiple cities so that they've proven they're not a one-hit wonder, and they have a revenue model. And so just like the same way Summit, to pick a private equity firm, might have a database of 60,000 companies that they're tracking for potential, like when maybe they would take a majority investment or whatever, and that database is an important asset. With years of experience, we have something similar on the not-for-profit side, coded by issues, so that if we're looking in Cincinnati at homelessness prevention, or we're looking at violence prevention and gun violence prevention, or we're looking at asset building for families that live in affordable housing, see if we can dramatically increase savings accounts, or something that would radically change third grade reading levels, because that's what the community might tell us in any given year. We can look at our own internal data set for if this is an issue that Cincinnati is having, and a gap, we might know 3 or 4 things that aren't in Cincinnati, because if they were in Cincinnati, the metric would change, that we could bring. And we're similar to a venture firm. We're continually expanding this list, because it's not a static thing, because especially as new technology is developed and new social entrepreneurs use AI to create platforms that change outcomes, there's continual innovation, and we always want to be aware of something, because we're not going to do anything about anything really until it's been proven in a city and it's proven it can span to a few cities. Then we know we can bring it to one of our cities, but we need to be tracking this stuff. And once it qualifies, So we're literally adding hundreds of amazing things to our database every year, because it might be something that the Bay Area would need, or it might be something that Dallas would need, or it might be something that Denver would need, or whatever. So there are, similarities and differences.
Totally. I wonder, since like a lot of our listeners are like fund managers or like emerging managers in general, so people may be curious about like, how as a fund, what does like the fundraising process look like for GreenLight? And when it comes to like selecting LPs, like was it the same batch of LPs who are investing in venture fund, or would it coming from like a government grant perspective? Sounds like a lot of GreenLight has been doing was matching the current resources with like existing problems. So doing the matching piece. So I wonder, as a fund itself, like how does it kind of like profit off the fund that has been like raised?
Yeah, I'll talk about how the GreenLight fundraising works, which,
Mhm.
just to simplify, is probably not that relevant. If I'm an emerging fund manager and I want to, raise my first or our first, $150 million venture fund to invest in, fast growing startups in the Southwest of the United States, what I'm about to say about how GreenLight raises money is really not that relevant, because in general, if you're, an emerging fund manager, you need to generally think about, friends and family, and maybe some institutional capital if you can, but a lot of time institutional capital says, this is great, but like, we want to see the performance from the first fund, know that you guys will stay together and work well as a team and be loved by entrepreneurs, and then maybe look at the second fund data as well to make sure you're not a one-hit wonder. And then in fund 3, you can access all kinds of institutional capital, university endowments, foundations, pension funds, and so on. So in general, you're when you're raising a first fund, heavily entrepreneurs, people that know you, people that trust you, high net worth individuals, ultra high net worth families, family offices, that's going to be the best place to spend time and try to get a lead investor that's going to do 10 to 20% of the fund, help you set the terms and be a lead investor and speak for you, and then round it up. Anyway, that's the way fundraising goes in the venture capital world. And I know at Highland, as an example, when I joined Highland, because after graduate school, my first job after graduate school was Charles River Ventures, and then some of the younger folks split off and formed Highland Capital, and I went with them at the creation of the fund. I think the first fund was like an $80 million fund, and it was mostly friends and family and whatever. And then the second fund, I forget, maybe it was like a $250 million fund, but there were a lot of institutions in that that wouldn't even have looked at the first fund. And so, just continuing on my recommendation for emerging fund managers, it's not really worth spending a lot of time trying to pitch people that aren't really going to take a look until the second or third fund. Time is precious. Spend it on the people that you think might back you in an emerging fund. And it could be other venture folks like me or private equity partners or whatever. Like, there's a whole bunch of people that might back you, but probably institutions are just going to paw at you. And anyway, unless you had some special relationship, trusted relationship. But for GreenLight, so the way we raise funds, I mentioned how we raise it in cities. So when we go to a city, basically what we're doing is selling our process and our track record. That, when we go right now, I'm putting the finishing touches on GreenLight Dallas as our 15th city, and we have like 75, founding donors, 4 million plus committed. Actually, there's a bunch of private equity folks and venture folks, in Dallas that are giving to that. But what we're basically saying to those folks is, hey, if you and my wife and I are contributing as well, and there's national donors contributing as well, just like GPs writing the first check to a fund. And we're saying to those folks, look, if you help us do in GreenLight Dallas, we can raise, minimum of 4.5, but it's probably going to be like 6 to 7 million, make it happen. Then what that's going to enable us to do is run our GreenLight process, and in 6 years, change 5 things in Dallas at massive social return to the community, because those 5 things, it's going to take us 6 years to to do that. And we're going to spend $6 million, but then those 5 things are going to be impacting maybe 50 to 100,000 children and families a year, changing outcomes. And they're going to be raising and spending, because they'll have an average budget of, let's say, a couple $1 million. They'll be raising and spending like $10 million a year to make change, whether it's state, federal, or other resources that are additive to the nonprofit pie. That's the equivalent of like, a $250 million endowment at a 4% spend rate. Like, it's a massive return on the expenditure of $6 million. So come in, help make this happen. We'll produce this massive social return, and then we'll raise another fund. And then, so what if this is in 50 years? In a community-driven way, hopefully 40 things will change in Dallas. 40 rungs put back on the ladder of opportunity. So come and join and make it happen. So obviously that's people that have enough capacity, and there's no minimum. Like the donations are, could be like $500 a year for 5 years, or some high capacity could be $250,000 a year for 5 years. And there's that kind of range in cities depending on people's capacity. But we just get people excited, involved, make it happen, and then produce results, and then raise a follow-on fund. So that's the way the fundraising works in the cities. And in the Bay Area, for instance, the first fund was $3.5 million. And that enabled us to go 4 years and do 3 things. And then the second fund was $4.5 million, because people came back and continued to donate, and maybe at higher levels, and then new people joined. So that enabled us to go, 4 or 5 years and do 4 things. And then the third fund ended up being like 11 million, because more people came back, people increased, and then there was, new people. And that's kind of the way, the trajectory that happens in cities, and that learning is applicable to for-profit fund managers, which is you raise a smaller fund than you think, that's fine. Deliver massive returns, and then you can raise a little bigger fund, and deliver great returns, and then you can raise a little bigger fund. And then someday, maybe you'll be at your target size or whatever. But anyway, that's the way we raise money in cities. And again, we are producing really important social change and social results. But for somebody to be interested in that, they have to be really passionate about their local community. They have to be civic minded, and yet they have to be, have the capacity to want to donate to things that are going to change people's lives. I certainly invited any GreenLight City listeners, whether they're venture folks or entrepreneur folks or private equity folks or whatever, talk to us about, donating GreenLight Cincinnati if you're passionate about Cincinnati, or donating GreenLight Atlanta, or being involved in GreenLight Atlanta if you're a fund manager in Atlanta or whatever, be part of it, because you're being part of something great that other peers are a part of. But then there's another part of it, which is, in order to run this network, we have a national team. And what we don't do is finance the national teams, which that's where our CFO, head of HR, our CEO, Ali Knight, who's unbelievable, our head of portfolio data, our head of marketing communications. We need kind of like a central nervous system. I talked about this database of all the things that work. We have a whole team that vets that, collects all the data on everything we've done and everything that we're looking at, and maintains it so we know how things are working. We could maybe improve things and whatever. So we need that national team, that central nervous system to support. But so we raise national funds to do that. We don't take 2% of the budget from all the cities and then shove it up to national. No, because obviously people don't want to do that. If I'm giving in Atlanta, I want 100% of the dollars to go to Atlanta. And that's the way we do it. So our national team, we, again, similar to a venture or private equity model, basically every 5 years, we raise a national fund for impact. The last time we did it was about a $15 million fund. And that's national donors who care about outcomes across America. Mm-hmm. So if Ford Motor Company is giving a GreenLight Detroit, or Procter & Gamble is giving a GreenLight Cincinnati, what they're looking for is change every year, issue by issue, in Detroit or in Cincinnati. But the people that donate nationally, which are people like our national partners like Bain Capital, Goldman Sachs, Bank of America, iHeartMedia, the NFL, some of the folks from the Bloomberg family, the Ford Foundation. These are people that care about GreenLight making change in cities across the country. And so when they donate to a $15 million fund nationally, that enables us to pay for our national team let's say for a 5-year period. And so the yield on that investment is, that like the next fund like that will help GreenLight go from 13 soon to be 16 cities to 19 soon to be 23 cities. And it'll help us go from the 60-ish things we've done to 5 years from now, close to 150 things we will have done for cities. And the close to 1 million children and families a year we reach now to being close to 3 million children and families a year. And the 150 things that we do, generating $300 to $400 million a year of governmental and other flow of resources into cities to solve problems that others wouldn't be solved at any kind of level. We're changing, making impact. And the national donors, that's the yield on their donation. And it turns out that we've reached the scale and we generate the outcomes that are sufficient enough for them to want to invest, which then enables us to have the team to execute. And so our business model right now is sustainable that way because everything we're raising money for has a value prop, which over delivers for investors. And so we've thought about the economics of it. But again, the raising money for a nonprofit is all about yield and outcomes and sustainability and long-term impact, as opposed to, financial return. So there's some places where analogies hold for fund managers in the for-profit world, but some places where not. But the concept of being able to say, hey, if you give us money, here's what's going to happen over the next 5 years, and having that be a good enough thing to justify the resources, and then actually going and executing and over delivering, and then having that enable you to then raise subsequent funds. That part of the analogy holds.
I am also I'm really impressed by all the people who are on the investor side on your website, because there is just so many well-known names, like a bunch of organizations you mentioned, as well as like the iconic basically C-levels themselves. And I wonder, when you are first started the fund to fundraise, and number one is how do you decide which city and what problem to solve, because there's so many problems.
Right.
On your website you list 7 different subsectors, but maybe we could use San Francisco as an example, because you mentioned SF is one of the cities that you guys picked. And one of the major problem is unfortunately the homelessness in the city. I wonder how do you pick which problem to solve first, and then would you have any solutions for, let's call it the homelessness in the city? How would that kind of problem be solved?
Yeah, these are great questions, and it would be fun sometime for you to have our executive director of GreenLight Bay Area on, because she's amazing and the work we've done is amazing. And you've a large Bay Area listenership who might be interested. But at any rate, so I'll speak a little bit. The first question you sort of asked is, how do we choose cities? And it's hard because right now we are in 13 soon to be 16 cities, because the city's publicly known. The last one we publicly announced is Denver as our 13th city, which we announced in January. But we're putting the finishing touches on Miami as our 14th city. We'll be announcing that later this year, or the very first thing next year at the absolute latest. All the funds have been raised, although more unbelievable people are going involved, and we've hired our founding ED there, et cetera. And then Dallas will follow as our 15th city, and that'll be launched sometime next year. And then we're starting to work this summer on Washington, D.C. as our 16th city. And we have this roadmap of 10 to 15 cities where people have been banging on us. You got to do a GreenLight X. There could be millions of dollars committed, all kinds of people excited. And if you come to city X, the good thing is that in 20 years, 15 things will change. And, we want that. We want GreenLight to be an additive part. You're not replacing anything in the city. All these unbelievable things you're just adding. And this would be something that the city would need. So at any rate, we have a whole, I would say, rubric or whatever for, how we score a city. And we're looking at the size of the city, because the size of the impact we could make, the size of the children and families living in poverty beneath the poverty line. We look at the civic spirit of the community. You know, is there a business community we can work with? Is there a governmental and public structures we can work with? Are there great things going on in the city that can partner with us to make change? Is it a place that great nonprofit models, might want to be in, but GreenLight being there can make it a lot easier to get them pulled in. So there's a whole bunch of things, but the problem is, like 2 years ago, we were deciding between doing a GreenLight Miami next and a GreenLight Dallas. Both cities score really high on all of the things, reasons we would want to go and reasons that they would need us and reason we could be additive. But at the end, just like somebody who's building a cellular network for AT&T just has to make a decision where you're building it. We just had to make a decision like, let's do Miami, and then hopefully next year we'll get to Dallas, and so at any rate, that's how we decide about cities. And so the Bay Area, we obviously knew a lot of people, had a lot of relationships from, the business side and the venture side and backing of companies, et cetera, and LP side, et cetera. And I also knew that despite the fact that there's a lot of people doing incredibly well in the Bay Area, there's a huge population living below the poverty line that's getting left further and further behind. And so I knew, if we can create a GreenLight Bay Area, again, in 50 years, we can address 40 issues and do our part. And so anyway, so this is why we decided. Now, this next question you asked about, well, so many issues, including like homelessness, how does GreenLight Bay Area decide what to do? Because in 10 years, we've done like 8 things for the Bay Area. So the way we do it is, and Harvard Business School did a whole case study on this, essentially, how GreenLight, all the decisions are made locally, but yet the outcome is always going to be like on brand and on quality, and we're going to be able to deliver promised results both to national investors and to local investors, because there's so much quality control that we know, geez, in 10 years, the 8 things the Bay Area does, they're going to be amazing. They're all going to be rungs on the ladder to opportunity, and they're all going to be amazing. They're going to work, et cetera. But the what's going to be chosen, what issues and what thing, that's all going to be decided in the Bay Area. So at any rate, we raise the funds, as I mentioned. We hire a local executive director, and that's where the buck stops. That's somebody from the city. Our ED actually lives in the Oakland area, that is the person that's making ultimately the decision every year which issue and which thing to bring. But once we've hired the ED, they sort of build their team, and then we build what's called a selection advisory council. And the selection advisory council is not a fiduciary board. It's kind of, to some ways, like a LP advisory board for a fund manager, but a little bit more than that. It's representative of community. So we want on that selection advisory council in the Bay Area, the deputy superintendent of public schools, the number 2 at United Way, the person who's head of grants at Tipping Point, the person that runs grant making for the community foundation, people that are running local service agencies, maybe somebody who's representing a tenants association in a certain area within San Francisco. So and make sure that it's a really broad, diverse, representative of community, so that anybody can see, and it's like a 35 person group, that anybody can see somebody that they know or relate to or could give feedback to or give thoughts to or feel like would identify with them. So maybe broadly representative. If somebody doesn't feel that there's somebody representative of something on our selection advisory council, we can always add it. So at any rate, raise the funds, hire the ED, build a selection advisory council. And now we're going to run an intentional annual process where every year, Kate Schwass, who's our ED of GreenLight Bay Area, is going to basically be talking to superintendents of public schools, mayors, United Way folks, community residents, and we're asking a simple but little different question from everybody else, which is, what's not happening? What outcome is not happening and not changing that people really want to prioritize? And we turn up but it has to be measurable. And it has to be something that, hasn't changed in the last 5 to 10 years, and people don't think it's going to change. And so then can we bring something that's a change maker? And so every year we repeat this listening process, this listening tour, because different things turn up. Like sometimes we'll meet with the mayor and they'll spotlight these 2 issues. And then the next year we'll come back and have the same conversation. and they'll be aware of federal funds that might be flowing to address problem X, where there's nothing locally that would qualify. And they'll say, look, there was a huge problem in X. We didn't talk about it last year, but if GreenLight would bring something to address X, and we get those federal funds to flow, this is kind of a once in a lifetime opportunity to make this issue change for a long time. But they never mentioned to us 2 years ago. So this is why we repeat this process every year. And what we're also looking for, and then, so every year we might turn up 10 to 15 issues like that. But in the first 3 months of every annual cycle, our ED sits down with the Selection Advisory Council in the Bay Area and says, okay, here's all the things. Which 3 do we think we should prioritize this year? Because they seem most timely. They seem like we can most make a difference. And it's bite-sized, and it's something where, we can maybe bring a rung to address. And that's why, for instance, that one year we did food insecurity. There's another time we did digital divide. There's another time we did something that would, you aspire, that would like double, triple, quadruple the amount of financial aid and scholarship dollars offered to kids graduating from the public school system because of all the technical assistance for financial aid. And so each year we looked at different things. We hadn't done anything in homelessness yet in the Bay Area. And the reason for that is sometimes as our ED is thinking about stuff, well, first of all, if it's like such a massive problem, like we'll try to segment it to say, we don't think we could do it, but like if we pick a certain type or a certain thing, maybe we could bring something that would reverse a certain type. So, but also sometimes when there's so much in motion and there's so many other people, like, well, maybe we're trying this and this and this and this and this. Sometimes GreenLight will just stay away from it because it's like, hopefully there's all these people, there's all this money committed, all this effort. Like, hopefully other people will make the difference in that because there's so many people trying different stuff and whatever. Why don't we just pick off a gap we know isn't being addressed and go make something happen? Because the last thing we want to do is try to insert ourselves where all these people are trying to do all these different things, and maybe somebody else is going to do something. So that's kind of why we haven't done anything. Now we have done a few things that are very relevant to preventing homelessness and building assets for families in affordable housing that can actually generate mobility out of affordable housing, that therefore increase the effective stock of affordable housing. There's some things that we've done in other cities, and without, kind of trying to, like, spoiler alert, there's actually something that we're looking at possibly bringing to the Bay Area this year that, given we've seen enough about all the issues with homelessness and things have started to shake out in terms of what's being done and what's moving and what's not being done, we're, I think, likely this year to do something that will be impactful. It's in an adjacent area, but it'll be impactful in homelessness. And that's GreenLight Bay Area's like 11th year or whatever that we're finally getting. And the reason is because, again, if so many people are focused on an area, we might just say, like, let's go solve areas that we think we can uniquely do.
Totally. I wonder when it comes to figuring out like what problem could be solved through capital invested versus like what are the problems that are just unable to solve by that. Maybe it's like a long-term issue that happens like, I don't know, like a forever ago. So like there's a lot of problems are very complex. That's not like a sustainable way to like pouring money into it. Like I wonder what would be the thinking process behind like what would be value added through investment and then what is not. And then you mentioned about like the when you were selecting a problem to solve, it's selected by the ED and the advisory board. That's similar to like a LP, like a LPAC basically. I wonder when selecting the problem to be solved, is that are you guys kind of like a do you lead the investment, or do you kind of like tag along to other lead investors who have more capital invested? I wonder how does that work on your end?
Okay, so there's a few questions you kind of mixed in there. So the first question, I'll answer the kind of last thing you mentioned, which is like when we're looking at bringing something like, I'll use another example. When we brought UAspire to the Bay Area, which was all
Mhm.
around increasing dramatically financial aid and scholarship offers to kids graduating the public school system across the Bay Area by providing all this financial aid assistance, kind of in a Intel Inside type model through UAspire, which would be offered through agencies and through school systems, et cetera, and could actually move the needle on the aggregate amount of scholarship dollars
Mhm.
and financial aid offered to enable more kids to go on to 2 or 4 year colleges and successfully complete and get degrees, and therefore more economic and social mobility. It was something GreenLight is acting as the catalyst. Okay, here's an area that superintendents of schools have told us is, kind of a broken rung on the ladder to opportunity. And could GreenLight bring something that would make a difference? And UAspire is this unbelievable organization, have done it in a few cities. And could we bring it to the Bay Area? We're going to act as essentially the lead investor. Like together with UAspire, we're going to map out like what would 10 years of success in the Bay Area look like? What would the revenues year 1, 2, 3, 4, 5, the costs, the outcome change, the magnitude of the KPIs, and then if GreenLight's going to select you and give you, let's say, $600,000 to $1 million to help make you happen in multi-year funding, and then eventually you're going to get paid by the school system, or here's the revenue model you're going to activate. That's the same revenue model you've activated in your other cities. But let's say, like an investment syndicate, let's say, wait a second, the money GreenLight's going to give isn't necessarily going to cover like all the costs until the organization will become self-sustaining. So then we might look for other co-investors. So we might talk to, some local funders and families and people that we know that know us that are passionate about this issue, and see if we can organize a little bit more money around it, to basically help provide all the capital to then get it to sustainability. So we're acting as like the lead investor, but sometimes we'll have some co-investors if the quote unquote startup expenses for the nonprofit to add the Bay Area as its third city or fifth city or seventh city, if it exceeds what we're going to give to make it happen, we'll try to organize some co-donors, right? But it's always co-donors because it's going to be sustainable. Like, we're not asking co-donors like and donate, every year for the next 10 years. It's kind of to help us make this happen, but then eventually it's going to be sustainable. So that's the answer to your second question, which is we are sort of like the lead, but it's really a lot of collaboration that makes it happen. Like we can, and obviously it all starts with local need and local pull. So GreenLight's not able to do anything if a community isn't really excited about something and wanting it to happen. And usually there's a whole constellation of partners that are coalescing around it. Like we can bring Food Connect to the Bay Area if food banks didn't want to use it, and school systems didn't want to use it, and agencies didn't want to use it, and residents want to use it. Like, so we're lead, but like we're leading a process that there's all this pent up demand and excitement around, right? And that's as opposed to lead being like we're investing in something nobody thinks they want, need, and we've done something heroic because we went in one direction where everybody else was going in another direction, which is kind of like the heroic venture capitalist somehow discovers something that everybody's ignoring or whatever. That's not the way GreenLight works. Okay, your other question about, hey, some problems are so complex, and you're right, and so there's a lot. Some things are way beyond our pay grade. Like remaking a transportation system in a geographic area where the transportation system is kind of broken, and so people who are living in poverty that are unemployed can't get to where the jobs are.
Mhm.
That's like multi-billion-dollar problem, bond issue. Like that's, GreenLight can't do something about that. Or let's say there's some, problem around substance abuse or whatever that nobody's found a way to change outcomes. Well, GreenLight can't bring something that it was successful in 3 cities to one of our cities if nobody's figured out a way to do something successful. So there's certainly a huge amount of problems that we can't tackle that are really important. But our view is, if we provide this community utility, and basically every year we, in a community-driven way, provide movement and change around one rung on the ladder to opportunity, like over a 20-year period, we'll get like 15 rungs to move. And over a 40-year period, it will get 32 rungs to move. And over time, you start to do a bunch of things. One is you provided a mechanism for a community to make change. Because it's kind of hopeless to be in a community and go like, well, what's changed the last 10 years? Like nothing. Well, why is anything going to change going forward? But once GreenLight's in a city making change, if people are knowing, whether it's school superintendents or whoever, that there's a change element that's in business just to make one change a year. And this can provide a lot of energy and motivation and hope and, galvanize a whole set of changes. And the other thing is then once we've done enough things, there's enough rungs back on the ladder. In Boston, somebody can go to school ready to read because of Raising a Reader, taught by a teacher that's been trained by a new teacher center. So they're going to much better teaching and much better outcomes. And then in a school where Blueprint Math Fellows is operating, so they're going to have 8th grade math skills and STEM skills in line with their more affluent peers. And then go on to a high school where College Advising Corps is. And so they're dramatically more likely to go on to 2- and 4-year college and graduate. And then if they start in a low paying job, but because of Periscolas, they can get trained and get a job that's like an $80,000 to $100,000 job, which we're training like 500 to 1,000 people a year. Like it's once you kind of have enough things going, like it becomes systems change over time, and are doing our piece on that. And so a lot of times very complex problems, it may be impossible to solve them, so to speak. But if you do enough things over a longer period of time, like you can start to bend the arc and change things. And we're big believers in that.
Totally. I want to be mindful of the time. I will end it with like a 1-minute fire round for you. First question: what's your favorite book?
Okay, my favorite book is a book called The Other Westmore. And it was written by this guy named Westmore, who's currently governor of the state of Maryland. And it's all about how just little things can totally change somebody's life. It's kind of a little bit like It's a Wonderful Life. And it's sort of, the movie is a little bit the same thing about that, how somebody can, without even knowing it, have like massive impact. The Other Westmore is just an unbelievable book. I totally recommend it to people.
Who made the biggest impact in your career?
I mean, I hope my wife's going to like this answer, but it was definitely my wife, because Sue, we've been married 28 years, and she was always encouraging and supportive. And, every time when it looked like, maybe I would slow down and, a new opportunity came around to, make impact and make change, she's supported me in that in every way. And there's no way I would have been able to do a fraction of what I've done without her and my family support.
Who would you invite to your dinner party?
Yeah, I mean, there's a lot of legendary venture capitalists I'd love to have dinner with and just kind of get their perspective on the industry these days. Mike Moritz, Vinod Khosla, Peter Fenn. I mean, there's all these folks that the industry has changed so much, and I've met them, but don't really know them or whatever. And we've looked at deals together or traded ideas or whatever. But to really sit down and just have a dinner about like the way venture capital is headed and the industry is headed and entrepreneurship is headed, and just getting some of their learnings and perspectives, would be back to that continual learning part that we talked about in the very beginning. I'd love to learn from them.
Totally. Where can we find you outside of work?
Well, work for me, there's the business side, which is, Sigma Prime Ventures. And then for things that don't fit in Sigma Prime, my own Venture for Good vehicle, which is designed to make investments in great companies and create gains that then will be given to charity, GreenLight, and elsewhere, which is what we call a venture for good. So there's the business side. Then there's GreenLight, which will find me either at Zoom getting people excited about GreenLight in different cities or traveling around to GreenLight cities. Other than that, it would be, if not, doing fun stuff with my family and kids, probably on the tennis court or on the golf course, or, doing something active. Love, competing and being active in the challenge of sports.
Amazing. Well, John, thank you so much for coming on the show today. It was such a fun conversation.
Grace, thank you for having me, and thanks for building the listenership and viewership that you have. And just look forward to continuing to follow all the great interviews that you have, and keep learning from all that. Thanks for having me. I really appreciate it.
Thank you. Let me quickly stream.